What's going on, family? This is not financial advice. Do your own research. Man, we're just gonna be getting into the charts and then we're gonna be getting into some personal finance. These are four things you can do during a recession to protect your credit for those who use credit, credit cards, loans, things of that nature. As you know, the interest rate hiking is still not done yet. They have not confirmed uh, that they will be cutting rates anytime soon because of the economy. The growth is still coming in. It's slowing, of course, but it's still doing well. So, excuse me. I'm going to be talking about these four things. Recession. We've been talking about recession for maybe the past 6 months now. So, recession can put you in a financial bind and may require you to access credit to cover your expenses because layoffs are coming and people already have started. The big businesses have already started laying off. Then we got paying down debt, building an emergency fund, and stick to a budget can help protect your credit. So creditors tend to tighten lending standards during a recession. So they tighten lending standards during a recession. So which this is when good credit comes in. It becomes very important during a recession. So, how to recession proof your credit? So, number one, pay off existing debt. So that should be a number one priority, regardless of a recession. As you know, borrow is a slave to the lender, and I'm pretty much against getting loans and using credit cards, things of that nature. But teach his own. Build an emergency fund. That's most important. Everybody should have an emergency fund, regardless of whatever's going on. That should be the second thing. Talk to your lenders. During a job loss, you can increase your expenses because you may miss a payment. So reach out to your creditors as soon as possible. And number four, I think, is very important. Revise and stick to a budget. So this is probably the second most important thing, in my opinion. Maintain a healthy, responsible budget. So when it comes to eating out, things of that nature, fast food is probably at the top of that list, and gas, fuel, getting back and forth to work. So those are the main things that I want you to look into during this period of recession, or whatever they want to call it at this point. But those are just some things that I want you to check out that I found interesting. Some free game for you. We're gonna get into the charts, man. So it's the S&P 500, as you know, the big dog. This is what I trade pretty much daily. So we're going to see that they broke down this level. The price action, they broke down 323 to 39.08. So they broke beneath this level, this green line here. This is the major zone that I had on the chart. It was basically a failed breakout of this zone. So we were looking for a pullback because the breakout never got a pullback. So we could come and test this zone from 38.77 down to 38.72 zone. Or we could come down to 38.50 and bounce. So to reach back up to this gap. They never really came up to 38.60 to test this zone. And they never came up to, I think they came up to the 50. So they never came up to the 618. Fib retracement of this push down. So we can just kind of show you these levels. Fibs are very important. It helps you show where the market is. So what they did was a 50% retracement of this push down. So you see they stopped exactly there. This is where they stopped right here. I'm gonna zoom in so you can actually see how real this is, man. So 50% retracement. They came right here, came between the 50 and the 618 of this push down. Failed breakout of this zone, and we could be looking for a push back down into this chop area, which we were chopping in for a couple weeks. potentially. So, but I'm still expecting this gap to get filled up here at 4,039.95 area. So let's get into some price action. I'm going to show you the trades that I took and what I saw particularly in this market. So I'm going to get straight to it. The trade that I saw this morning, it was around this point. This was a trade that I took. I'm going to zoom in for you so you can see a little better. All right, here we go. So this is what I saw this morning. So we had you can see it on the SPY. You can see that they came down further on the SPY, but they won't show it here. They came down, they bounced up, and this is what created this push up. So once I seen them breaking above this zone, a clean break, this was my entry for the push up. They consolidated, and I did manage to add on this pullback. So once they came back down, two-legged correction. As you know, the market likes to move in twos, so we got a push up. Then they stopped at the resistance, two-legged correction, big engulfing candle. I got in on a break of the 50%, and I caught the push up. Once they got up here, I closed my position and I left a runner till they started chopping around, and I just closed it out because I didn't like what they were doing. Up here, they sat up here for a while, just kind of slowly chopping down, so I just exited. And good thing I did, because this is when they start rolling over. They pushed all the way back down and closed this gap. So easy trading day to day. You could have easily made money today. What I liked about it was you had a nice uptrend. So if you creating these trend lines, you know they can be very efficient. First swing, second swing, we got two legs up, even got a third push up. And then if you were watching this zone, this was a perfect zone for you to cover. Look at that. Look how prices fit in this trend line almost perfectly. So what I liked about the downside trade, so this was the level that I was watching to be broken. So right here at the 50%, once again, this was support up here. So we got continuous lower highs. So we got once, twice. This is a potential good short right here if you wanted to come on down here. Then they came back up again. And then once I seen them break beneath here, this was a potential short that you were supposed to take. I did not take any trades after my morning trade, but this was the trade that I was going to take if I saw this live. So this was the actual support. So you see they came up here, they bumped their heads. So we got this area right here as support, right? This area is resistance. So all this zone right here, this is resistance turned into support. So they were supposed to go higher. But once you see them fumbling around here, they tried to bounce twice, and they couldn't even hold this zone. So once you seen them strongly pushing down, this was the signal to get short. I would have probably took profits down here somewhere in this zone, because this is previous support. So this is the zone that I'm watching for a potential bounce right here, because this is where they bounced the open this morning. And what they tried to bounce here, and they pushed through it again. So they came back and closed the gap. So all these zones up here are potential trades. So simple trades, man, just trend lines. As you can see, this is a wider trend line because the trend was so strong. And this is a wider trend line because the trend was so bearish. So I like two-legged corrections in an uptrend, and I like two-legged corrections in a downtrend. So we got a downtrend, two legs, and then we got a short off this moving average, another lower high that couldn't close beneath it. Push down, you could have got a nice trade, probably about I would have seen the break 34 to 29 for about 5 points. You could have got on this push down, that tiny push down, and then they had another correction, and you could have entered short here because this is the previous resistance. So they came up, tried to bounce, failed. That was a nice short, and then they fell off. So today kind of shows you what they're doing. They look very weak, man. You know, the Fed is talking tomorrow, and we could see a rally to fill this gap. This is probably the next target. Or if we get follow through tomorrow, when the Fed is speaking at 9, if we get follow through tomorrow, we could see some potential downside back into this chop zone down here. So just be aware, man. React to price. Don't try to predict, and manage your risk, man. Like and subscribe, man, so we can keep this content pumping. And I'll see you guys tomorrow.